Welcome back to FintechOS Evolv Podcast. Delighted to have these two folks join me today. Leda Glyptis, first of all, got to say author.
Yeah.
All-round banker.
Doctor.
Not the useful kind.
I've got the books here as well. So, Bankers Like Us was your first
That's right.
original book. So it needs to be signed later on for you, Josh. And of course, the latest one that came out last year, which is Beyond Resilience,
That's
which
right.
I've got to say, I have read.
Oh, yeah.
I have read it. Yes, I have read it. In fact, it became the main focus of a lot of the questions I'm going to be posing to you today. So you could be able to tell if I read it or not.
Yeah, well, funnily enough, when the first book came out, I was invited to a dinner and sat next to this chap who hadn't worked out who I was until halfway through. And the hosts had given my book as a gift. And halfway through, and a few wines in, I'm guessing, the guy went like, "Oh, you wrote this? Did you, though?"
Yeah.
And he opened it, and he was like, "I will now quiz you to see if you really wrote it." I was like, "Oh, okay." Not
could have
how
been the other way around.
works, but okay.
Yeah. So Josh White's joined us as well. Josh, sales director at FintechOS, bringing your own perspective of what you're seeing in the market as well. But also, let's not hide from it. Two very good friends.
That's right.
Rich history in your own backgrounds. So great to have you both on.
Thanks for having me on, Mark.
No worries.
Long-time listener, first-time caller.
Indeed. Yeah. So look, there's only really one place we can start, and it's not your, years and years of working in banks. It's got to be, why the hell did you write the first book, let alone the second book?
It's a very good question, and the short answer is Tanya made me. So I started blogging about 10 years ago, and what has become Leda Writes started as sort of hidden away from the powers that be inside the bank, blogging for therapy and sanity. And I remember back then I worked in big banks, and I used to have the disclaimer, none of these views represent my employer. And I did get called up by the hires up a couple of times at different banks going, we read it. We are not uncomfortable with it.
Mm-hmm.
But,
Just letting
be
you know.
careful. Yeah, we know you read it. But it started as therapy. And when I first started, and I've said this story before, Tanya said, weekly, and I was like, who wants to read this stuff weekly? And she's like, trust me, weekly. And if you think 10 years back, there wasn't a lot of what the hell is happening from the front lines. There's a lot more of it now, but at the time that I started, there wasn't a lot of it. So there was a very organic, natural community that grew up around the writing. And then about 5-6 years in, however long it was, Tanya said, it's time to write a book now. And she introduced me to John, who is my editor at Taylor & Francis. Mm-hmm. And then once you've had such a warm introduction, you have a responsibility. Plus, people had been jokingly prodding me. And then I wrote the first book. And as I was writing it, I was coming up with things I really, really wanted to explore at greater length, and couldn't fit it in. So the second book was kind of all the things I really, really wanted to write while writing the first book. And I came very close to abandoning the first book. And my publisher was like, no.
Really?
Thank you, John. Well, the first book is very similar to the topics I write about in the blog. So part of me was like, my audience know this, they like it, they come back for it, but I know the answer.
In Beyond Resilience, you actually write about moving past just surviving, the bank's just surviving now, and kind of actually thriving in this new era. Mm-hmm. So I guess, what fundamental change are you seeing now that are kind of driving that thriving rather than surviving piece?
I don't think
that was page 63.
I don't think we're quite there yet, but I think there's a gear change finally, and I think it comes from two places, and they're sort of accelerating each other. One is generational, because the reality is that this journey that we've been on is over 20 years now that we've been on it. So people like myself, you're both a lot younger than me, but people like myself we were banging our heads against brick walls when we started our career. We were the people who were representing a lot of this new technology and faced the CTOs who said no and the risk committees who said no. Well, 20 odd years on, we are sitting in those committees. We have this C's in front of our titles. Yeah. So that generation change doesn't mean that we know everything or that we're comfortable, but there is a sea change in what is expected to be impregnable inside a big organization. Yeah. I think the second thing that has happened is even those who weren't proponents of change are realizing that if you're sitting in a financial services organization, no matter how big you are, you do not dictate the time frame. And if anything, AI is proving that at a terrifying pace. Mm. But even before this hit our lives and our realities a couple of years ago, it has been a gradual and grudging realization that we don't set the time frame. So that combination of generational change and that realization that you can participate in the economy, you don't get to decide, this makes me uncomfortable, take it off the board. Yeah. I think those two changes are what will enable us to start thriving.
Do you see it differently between maybe some of the traditional banks and challenger banks, or is it a similar setup? Do you find the challenges a bit more quicker to make those changes, or traditional banks probably got bigger budgets? But
it's a good question. I think it's a different set of problems, and again, AI is an interesting one because the challengers are 10 years old, most of them. Yeah. So actually, they are pre-generative AI in terms of mass adoption. So some of the changes that need to happen in terms of where you spend money, how you organize your teams, the non-technical side, that is always difficult because you have to make decisions on incomplete information. Yeah. Their data governance and their discipline around evergreening their estate should be better than that of a traditional bank. But this is where the rubber hits the road, right? The neos came in representing a different kind of technology approach. Right, now we'll see how true that is.
Yeah. And I guess the fintechs as well have come in, and the speed at which they've come in and tried to affect that change, and even the regulator's degree is also trying to make those changes as well and speed them out. But I think the fintech space, Josh, I mean, you are the fintech space. I mean, you're seeing it a lot,
all
right?
Of it.
You are in this couch. You are the fintech man. Yeah. Okay, so you representing fintechs across the world. Is now up to you to drive that change.
I'm sure some people would not like to hear that, but yeah.
But it is. FintechOS is about 10 years or so old. Yeah. You think about the environment that's come into across Europe, into the States, and now into the UK as well. And the conversation you're having with both challengers and maybe some of the smaller scale tier ones that are trying to address some of that changes.
Yeah, I mean, even today, having conversations with various shaped sizes of businesses, I think about it in that they are having to understand how to compete, and I think that double-edged sword or other side of the coin of competing is kind of the fear of missing out. And there's quite a few businesses understanding it. I think the other reality too for many of these businesses, 10 years ago in today's world is a very long time ago. Yeah. Even from a regulatory perspective, as you just mentioned. Yeah. So, you're looking at, what should be a very simple process in a modern time, but even just basic data being captured or is required to be captured at a time is no longer relevant. Yeah. And so that just, what could have been shiny at the time is simply no longer shiny anymore.
And I guess the expectation of both the bank and the customers have massively changed as well.
Yeah, I mean, we talk about that a lot, living in a life-centric economy. Yeah. The reality is I can grab my phone and really do anything that I want to do or think I should be able to do. So my expectation as a consumer as I go in and open up an account or get a loan or a mortgage, when I got my mortgage, I was trying to get a home. I wasn't trying to get a financial service product. And I feel like it should be communicated that way to me, but at times you still have to represent consumer duty and the reality of what you're doing and what that means to all the different parts of the chain.
Is it always faster and easier? Is that what everybody's after? Is that the holy grail?
I mean, I've talked about we all live in like this microwave culture where everything has to be kind of instant and served to you immediately. And yeah, I think a lot of people look at their financial institutions and would expect the same thing, even if there is a lot of complexity that needs to happen in the background.
Yeah, modernization has been around. I mean, we'll get into AI a little bit later. It's so hard to keep not dropping the AI comment, but I mean, banks have to make choices around modernization, digitalization all the time, and you've done the rounds several times on this. And you actually sat in our year end last year, and you made a fantastic keynote speech around these topics. And what are you? What are the things that are constantly coming out that you find around this modernization versus digitalization, or are they together? Are they one? You find a difference of attitude?
I think if you take any decision maker away from the room where the decision has to be made, they will be thoughtful and aware of the fact that actually the different doors to the same space. And if you want to compete in a digital economy, you want to cater to the consumers or the service providers to those consumers that, exactly as Josh described, we expect things to work, we expect things to be available, we expect things to be cheap, if not free. And we expect to be able to reach that information without preparation or a cooling period. Like you have a holiday booked and you don't actually look up any of the information before you get there because everything is somehow available somewhere in your digital footprint. So wherever you are in that chain, if you take people out of the room, they know that whether you modernize, scrap, build a parachute, a sidecar, we have all of these beautiful euphemisms. But you go back into the room and the reality is there's finite amounts of time, money, and talent and headspace. So the decisions around modernization, digitization, whatever you want to call it, is about where are we going to draw the line of what we will do as part of this work. And we around this table all know that it's an artificial line because as you pull things, everything is interconnected in ways that probably shouldn't be. I mean, I have had in my career, as you say, I've done the rounds, and I've had in my career times when we would grandfather a system back when we didn't even understand how deeply interconnected things were. And to grandfather a system, you usually have 2-3 years of process mapping and dependency mapping. Then finally you switch it off. And somebody in a department that didn't even have access to the system was like, wait, I was using it as a reference library. And you're like, who are you? And so the reality is that you have to make decisions about what you're going to take on for this budget, this cycle, and the line will always be artificial, and the handover between what you change or what you build and what you have will always be uncomfortable. That's the reality we live in. So as I look at all of the banks of all sizes and ages, it's the decisions that were kicked down the road for reasons that I understand that are weighing heavily now.
And you said something, and I think it resonated with everybody in the audience around, you don't get as much time as you think you're going to get to make some of these changes. Typical, core replacement, 3 years, X amount of millions. You don't get 3 years anymore. You don't get 3 years to affect a change. You
don't get 3 years. And when does it ever take 3 years?
Maybe I put one in front of that. But it's, I call them CTO killers and people laugh. But I very rarely are the same group of people who have started the program there at the end, because it's shot over budget, it's shot over time. Right. They're unrealistic in terms of what they're trying to deliver. We've had the years of long core replacements that don't quite drive the efficiencies that they ever said they were going to do. So I guess the attitude is now coming around again. Okay, we'll just kind of leave it there. And what can we do that we can do in months rather than years? That's not going to cost as much money. That is actually going to drive some of the efficiencies that the kind of customers and banks you're talking to need.
Yeah, I mean, you think about having to, the amount of effort and time that goes in and decision-making process that goes into some of these huge projects. And at some point, you can't just start over and do that again and again and again. You need to leverage what you have, but sometimes put something shiny on top that actually starts connecting these systems, and perhaps you don't have to shut that random system down that Joe in the back office has been using as a reference, as you mentioned. yeah, it's an interesting one.
Do you see many big bang type transformations going on still, or is it far more modular now that drive early value both in terms of cost but actually putting it in the hands of the people that matter, rather than just waiting 3 or 5 years where everybody's even forgotten about what I was doing in the first place?
So I'm seeing speedier progress, and I think part of it has something to do with that generation change. A lot of the CTOs, even in big banks, are people who have actually grown up in a different pace of environment. And you occasionally get the CTO who will go, "What's wrong with my mainframe?" This happened to me. Somebody said that to me, and I was like, "Oh, buddy." But the reality is that generation change means that delivery inside big banks is actually pretty robust. It's pretty good. Yeah. The difficulty is that if you focus on delivering things that will make you competitive at one end, you're not focusing at simplifying your estate, which means that you carry a certain cost footprint. It means that you carry operational complexity. You carry technology from before some of us were born. In fact, most banks carry technology before any of us were born.
Yeah, absolutely.
And it's a fine wine, but it ain't a good age for a system.
Yeah.
And so the challenge is no longer, can the big banks deliver? They can. Can they understand how to use it? Can they get their unit economics right? They can. They have demonstrated compellingly that they can do all of that. Yeah. And I read somewhere yesterday that actually Fintech happens mostly in big organizations, and we should accept that there is really good work going on. The problem and the complexity and the strain on the budget and the risk committee and all of the fun stuff comes from all the things that you haven't sanitized that are lingering and they're just there. And sometimes they don't cause any problems, but sometimes they do, because you have your source of truth is fragmented. You have teams with different skill sets all over the place operating. I went to a dinner in New York last year, and to the left of me, I had the person who ran digital assets for this particular bank, and they've invested a lot of money because they understand that's actually more of a treasury capability than so it's not about Bitcoin for them. It is about using stable, really, really strategically intelligent. And to the right of me, the guy who runs the mainframes for that same bank, and he's like, how?
Two different worlds.
Do you talk to each other? Yeah. How does this make it make sense in a way that doesn't require me understanding how a risk committee works? Because the minute you understand how a risk committee works, you know exactly how this makes sense. Because the mainframe is fully amortized, and if it ain't broke. Yeah. So for me, the question is now one of risk footprint and operational complexity. And when I start talking about this thing, you see people's eyes glazing over, because it's not sexy, it's not exciting. It's like yawn, leave it to the back office. How long for, though? We're dragging so much stuff with us. Yeah. And you have these conversations, Josh, all the time, where you talk about if it's not broken, don't have to replace it, right? And this element of composability that you can put on top, this layer on top, that can be agnostic to I guess some of the legacy stuff that's been around for 50 years. How can some of the new tech work with some of the old tech to just make things better? I think we've both sat in a lot of these conversations, given our backgrounds, and everyone's looking at whether it's a new core or it's a wrapper layer or a bit of integration or partnering with a fintech to do the whole thing for them. But yeah, I mean, ultimately, some of these systems are doing probably more than they should be doing, to your example before. Yeah. And if you can dial that back to a point where let it do what it says on the tin, and then where do you actually find the value? In most of the consultants, the big four, the boutique shops, they're all hammering down the same message of, customer experience is where the value is, both in ROI, but also in, attracting new in a growing customer base and whatever business line you're in. Yeah. And it's interesting because in your first book, I kind of read it. I can't say I read it cover to cover, I'll be honest. But I shouldn't quiz you.
No, you don't. Please don't quiz
please
me.
Do.
Yeah, please do. How to embarrass me in 2 seconds. So, but in banks like us, you talk about kind of the sense of leadership, and actually transformation isn't just about the tech, right? It's actually about the humans.
Yep.
And I talk about this subject all the time, and I always say about, I wish I would change the phrase digital transformation to transformation with digital, because too much emphasis gets put on the word digital, and everybody thinks that technology solves everything.
Magic.
Yeah.
That's what I'm selling, by the way. So
back off.
So I mean, that I guess it comes from what you said earlier on about the people who truly understand the human element of transformation have now found themselves in positions of trust and power within C-suite, and hopefully are driving that message through that actually you've got to transform your business, your bank, to enable the ability to digitize. Are you in the various circles you run? Is that resonating?
Yes.
Or is there still resistance?
No.
Yeah.
So the yes part is that you have people who have the knowledge, have the scars, have the experience to ask more thoughtful questions, to start from it's almost like you play a video game, right? You don't start from scratch, right? They've cleared a few rounds. They know how to play this game.
Yeah.
And they come into these positions knowing full well that what Josh just described is the reality of life.
Yeah.
You do not get a blank sheet of paper.
Yeah.
So actually making the most of what you have by time, but in terms of budget and available resources, is the job. You're a custodian of a business. Yeah. Switching everything off and putting the shiniest technology in is never going to be the plan for anybody. So the decision making is messy. Because you don't have perfect solutions. You have to balance what you've got, your ambitions, your aspirations, and your budget. And none of it is as clean, as seamless as you like. Looking for the right partners becomes absolutely strategic. But I think the difficulty is that we are in the driving seat now as a generation and seeing that making decisions on incomplete information is terrifying.
Yeah.
And maybe the people who were hesitating 10 and 20 years ago weren't doing that because they were naysayers, but because it's actually really hard to guess how long we've got and where to invest and what not to do. And particularly when I work with big banks, with boards and C-suite groups, behind closed doors, the conversation always comes back to, what can we afford to not do so that we can do the things we do well? Partnership is always part of the discussion because it actually allows you to amplify how far your buck will go.
Yeah.
But let's call it, those of us who are like firebrands 10, 20 years ago going, oh, why can't my organization move forward? Now you're in the room and you realize that some of those decisions feel like shots in the dark.
Yeah.
And I know we keep dancing around AI, but an organization deciding to use AI now or to double down and to really understand what that means beyond rolling out Claude or Copilot, which isn't doing AI, they will very quickly realize that you have to make some moonshots and not all of them will work out. And while you're doing that, you're not doing something else. And that's the job.
Yeah.
And that's scary.
Yeah, it's brave. It's got. You've only can place 2 or 3 bets in any given year, and you've got to be brave enough to be sit by those bets. But I still, if I was being critical, I still see a fair amount of bad governance. People think good governance is a lot of it, right? And all these stages, actually, that's really not good governance. Is actually less governance, but make it really bloody successful. And so less is more sometimes. I do still see a lot of people surround themselves in I'm going to use your phrase because it's great, this teddy bear's picnic piece, which you're going to have to elaborate on for people who aren't in the room. But that I still see that a lot, Leda, a lot. And I think that still gets in the way. For the listeners and viewers who don't know what I mean by a teddy bear's picnic, I think you're going to have to elaborate on that now.
Yeah, I'm chuckling as you go because I had an engineer who worked in my team back when I was at BNY. So we're going back a really, really long time ago. And engineers tend to not like pointless meetings anyway. But I had sent him to a meeting where he just had to shake hands and kiss babies, as you do in every big organization, right? And actually BNY was better than most in terms of overhead. But there was this meeting that was just about getting people comfortable with what we were doing. And he came back and said, I'm not the right person for teddy bear tea parties. and so I've been using his phrase a lot without acknowledgement because I don't think he wants.
Was he acknowledged in the book?
He doesn't want to be acknowledged.
Okay, fine,
because he still works there.
He's not in the index. I was just quickly checking his name.
He still works there. But I think it's genius because the reality is he describes something that we've all been through. The meetings that are actually not there to make a decision, make a change, but they're there to make everyone feel more comfortable.
Yeah.
And humans need those. I haven't missed anything. I have been consulted. I'm acknowledging the significance and importance of each other. Each organization has its own cadence of how many of those you will have. And I worked in an organization recently where my assistant worked out I had 34 hours of standing meetings a month that were not one-to-ones, they were not client, they were not, they were teddy bear tea parties. Yeah. Now, the teddy bear tea party never feels like a waste of time when you're in it. It's just that it doesn't move anything forward. And there's nothing wrong with it other than it's time that you might not have.
Yeah.
So I'm thinking about that, as we're talking about it, because there's obviously a balancing act in, bringing the organization along this journey with the folks who are actually making the decisions, right? Like, because there is some time and place for a teddy bear tea party, but just not too many of them.
That's right.
Yeah.
And how do you know what the right amount is? Because not every meeting can be operational. Sometimes you need to allow people to voice discomfort. Blind spots will come from where you least expect them. Yeah. Unstructured conversation is often where some of your best ideas come from. So it's an art, not a science. But one of the things that is interesting is that you need to make a conscious choice about what kind of organization you're going to be. Yeah. So I explore a couple of shapes in the book. And I'm very honest about the fact that some of them I don't like, but they seem to work for these organizations. So for instance, I spoke to the CEO of Sardine, Soups, and Soups is very much of the opinion that you should have open meetings and everyone involved, even loosely, should come to a meeting, and you'll have like every layer of management so that information is not mediated. I was saying to him that I don't like passengers in meetings. Unless you need it here, you should be doing something else. But his view is information needs to flow. People need to understand. You need to allow for information to be accessible for those who want it. So one of the interesting things is that I explore different shapes of this in my book. If I ran an organization again, I wouldn't necessarily go for all of those shapes, but if they work for you, they work for you. But I think the interesting thing, to go back to what you were talking about earlier on governance, is that we're very often leaning towards more governance rather than better governance.
I
because
agree.
You don't want to tweak with the governance, so you add things to it. So you end up with a lot of teddy bear picnics because let's have 38 meetings rather than one. I will say one thing that came out very, very strongly through every interview in the book, though. Choosing what you're not going to do is powerful, even if the things you choose to do are the wrong ones, because it doesn't cause dilution in your organization. So if you have the discipline and governance to say, as you say, we're only going to place a few bets. These are our bets. They're not always going to be the right ones. But if the organization has the ability to focus, articulate what we're not going to do, not hedge, which creates context switching and dilution of resources, then you'll be able to quickly go, you know what, ain't working. Let's do something different.
And that culture piece comes up in every transformation, usually as one of the things that's failed, right? As one of the reasons this great technology piece is about, because there's a culture from the top down we haven't got right. So and it rears its ugly head now, where culture isn't quite fit for the business.
It's hard.
Yeah, it's not as if the technology itself isn't working. It's the bigger picture.
Yeah, and it's hard because everyone says the right things when things are going well. I mean, I won't quiz you, but in the first book, I use a concept one of my colleagues used to what was the concept, use a lot.
Mark? Sorry to you.
I'll get to that,
Yeah, I don't remember what page it's on, though. But it's the closet of shame, right? When something goes wrong.
Closet of shame.
When something goes wrong, we'll never speak of it again.
Yeah.
Now, never speaking of it again probably means that heads don't roll, that people are allowed to make a mistake and are not fired.
Yeah.
Good.
Yeah.
but we don't learn from the mistakes. We make it again.
Yeah, you get that good news culture piece, don't you? Where you only ever talk about the good news and the bad news has never happened. It's evolved, except for when somebody's head's got a roll and that bad news comes out really quick and it's pinned on a certain person usually.
That's right. And like, I'm not going to name names, but given the space we work in, we all know some core transformations that have been unsuccessful, or they hit a regulatory obstacle that probably should have been expected.
Yeah.
And then a big show is made of a head rolling. And because we all know how decisions are made, the chances of that individual actually making that decision single-handedly, zero, right?
Yeah.
So the reality is, should someone's head roll, unless there was malicious intent or fraud, chances are a decision was collectively made, and either information changed or you all indulged in magical thinking together.
Yeah.
But that head rolling actually adds to the bad habits, because then it makes it even harder to take initiative and go, this isn't the right way.
It does.
It's a classic sports analogy is, you learn more from a loss than a win.
Yeah.
So to sit there and actually break it down, what was the reason for that, and try to understand that rather than just pointing the finger and getting rid of that person.
That's right. I sat with a client recently and I was talking to their sales team. I was like, why do we lose? And the discomfort
that's interesting,
of saying it. What's the first question you want to know if you're going to be able to help, right? The discomfort of sort of sharing that information in front of the layer up told you a lot about the organization. Meanwhile, if the C-suite doesn't know why we lose, how do you make any decisions about where you're going to invest, what markets you're going to go into?
Yeah, exactly. So it's interesting because the conversation we're talking about now, you can point to a human and aim the gun. And as we pivot now from the human to this thing called AI, which you can't point the finger and fire, but AI has now become, and I've waited to the last 15 minutes of the podcast to bring it up, but has become such a fundamental discussion topic within financial services now. It's bleeding into everything, and I still think there is an element of fear of missing out, as you've talked about, and smoke and mirrors to a degree as well. But I guess there is a difference between genuine AI transformation to this kind of PR element of AI. And I think you've got a really good view on AI in banking, which I guess is sometimes different to maybe a lot of the people who've been on the show before and listen are incredible AI enthusiasts. And look, you can't deny it's absolutely everywhere, but with maybe more seasoned people have a view that, okay, yes, there's absolutely a place for it, but financial services has always been quite a dinosaur. It's going to be a slow burn. I'm really intrigued of your take.
It's a big question, and I think there are two things that need to be said here. One is, what will cause the accelerant, whether we like it or not, whether we're dinosaurs or not, and I'll come back to that in a second. And the second is, what does it mean doing AI? Because I'm very much of the opinion that rolling Copilot or Claude or those tools that are actually ChatGPT for business, they're brilliant, but that's not you doing AI. That's you allowing your organization to move with the times. Yeah. And arguably, you shouldn't be doing anything proprietary in that space. I often joke about the time that I worked in an organization that built its own API gateway. Why? It's utility. But I'll tell you why. When something is new, you don't know where the line between utility and proprietary capability needs to lie.
Yeah.
So one of the things that we're going to learn the hard way right now is what needs to be yours from a competitive perspective and a regulatory perspective, and what can be a third-party utility.
Yeah.
The way that AI tools are being rolled out right now is literally that. It's tools. You're not going to create your own version of Word any more than you're going to create your own version of ChatGPT. But that's not using AI, really. So what we lack inside a lot of organizations is either the creativity or the patience to allow for the use case to emerge.
Yeah.
Because the reality is, when we first started thinking about DLT, when we first started thinking about APIs, we were very unimaginative when you forced it. But actually, when you allowed things to be capabilities we understood,
Yeah.
the organizations found ways to rewire themselves. So are we doing AI in financial services now? Sporadically and not very well, but it will come.
Yeah.
It will come naturally and organically, and it won't be that you've rolled out Copilot to your entire product team.
I think it's a great point, because you do see, I think there's a great distinction between true AI use cases and just AI tools. Because, I mean, I actually know quite a lot of banks are starting even using AI tools. They say they are, but they won't even let the employees, have their own license into ChatGPT. They'd rather them bring their own device and copy it over, and the amount of risk in that is horrendous, but they're still doing that.
Yep,
so there are different levels of the use of even AI tools, but I always go back to the point where unless you're foundationally ready for it, and I still am questioning whether a lot of people are in terms of expertise at board level, at ExCo level, the right policies, the right procedures, actually set yourself up. And I've talked negatively about governance, but this is a positive one. You've actually got a structure in place to enable yourself to be AI ready,
right.
even your data.
But then the reality is you need to bring someone in who
experience.
So you need to look around your table and acknowledge that you don't have someone who understands this, and bring someone who isn't your buddy that you served on another board with, but someone who really understands this space.
Yeah.
And the thing that will galvanize this, I absolutely believe it, and sorry I jumped in there, Josh, is fraud. Because the fraudsters, particularly around financial services, are being extremely slick in how they use AI.
Yeah.
And you have to fight fire with fire in detection, and so we will be forced to mature capabilities whether we like it or not. And as a full circle to what I was saying when we started, we don't dictate the pace anymore.
Mm-hmm.
Yeah. I think it was a good point you made around even the foundations and your data being ready or clean or organized or not siloed and fragmented.
Yeah.
But also, you have conversations and you see articles, folks talking about wanting to have AI in their banks, yet they don't have fundamental things integrated the way they should be, or basic workflows and automation the way it should be. And they're saying, well, we need AI. It's like, well, do you yet?
Can't have it.
Yeah, I think there's some other things to clean up before this comes in. It's interesting.
It's because, I mean, look, a FintechOS is an AI-enabled platform, right? And you talk to a lot of banks now and building societies around using that capability in origination, in some of the fulfillment, and it's usually one of the first things they end up talking about, isn't it?
Yeah, I mean, I almost say you can't do a pitch in 2026 without leading with AI. But I think
it was cloud first a couple of years before, cloud native, right? So now it's AI.
Exactly. Yeah, someone else just brought that analogy up recently as well. Cloud was a big rage, and still people are on-prem, private cloud, et cetera, which isn't a bad thing. I mean, even that we've tend to lead with AI as we've positioned our company to be. But you have to be very careful about how you start framing these and the problems and challenges that you're actually trying to solve and what can be done with AI. We talk about, and you brought it up, fraud, compliance, underwriting, some of these more maybe mundane tasks that, an underwriter or someone in the compliance team might have to do 70 times a week, 10 minutes each time. How can you begin to use AI to help speed up that process with a human on the loop in that? But to even get there, again, is back to the kind of foundational issues of your integrations, your other systems, fragmented data, and how do you bring all of that into one thing to define a solution that is going to work for that specific institution?
Yeah. And if you can't answer the question around the risks around using AI and the ethics as well, and you haven't got that solved as an entity, you're just going to feed AI with a whole bunch of rubbish you can't stand behind. And the worst thing that can possibly happen to any establishment is if it goes wrong and PI gets leaked or a decision's been made that shouldn't have been made. And we've seen some high-profile stuff with some other platforms that automatically discounted certain women age groups for job because the AI kind of assumed that they're probably going to have kids at some point. So they automatically got discounted.
Tells you a lot about the humans who designed the process, right?
Yeah.
But there was a pretty big case about a year ago when an airline was using an AI-enabled help chatbot and gave the wrong advice to an entire boatload of passengers on a cancelled flight. And there was a class action lawsuit on the back of it. Now, there are two ways of thinking about this, right? One is we need to get it right, where credibility and reputational risk are not to be trifled with, but also it's people's money, it's people's livelihoods. We have to be cautious, we have to be careful. Simultaneously, there is an element of, if we believe that the world is inexorably going down this path, and I think we all do, whether we like it or not, there is an element of, how do we put ourselves in an organization where we're forced to fix forward? And I know I talk about burning the ships a lot. I wouldn't argue burning all the ships quite yet on this, but the mindset of, if we believe this is the future, we need to put in the discipline inside our organizations to fix forward when these things happen, when there is a data leak, when there's a data breach, when there's a decision where the explainability has gone out the window, when the wrong call is made. Because the reality is, all those things happen without AI in the mix. And every transitional moment comes with more vulnerability, especially when the bad guys are better at learning the new tools than we are.
They've got the same access to the same tools that we have.
Exactly. And they don't have compliance departments. So the reality is, we're going to have to do this. So how do we enable our organizations? What do we do to make sure we lean into it and fix forward? Because when the bad stuff happens, the decision maker's instinct, and I understand it, is to retreat back to the thing worked.
Safety net.
But you can't do that.
You actually, in your book, Beyond Resilience, you actually talk about the ability to build your organization around adaptation, how to adapt to new things. And this is just a great example of one of those things. The new world of AI is coming to an industry that potentially lacks the experience and knowledge around the subject, and probably isn't built foundationally to even accept it yet, and yet are all running off doing many pilots around many use cases, possibly disjointed and fragmented at source, hence why a lot of them fail still. It's if your organization can't adapt to the AI today, whatever the next thing is as well, then
adaptation is a big thing. And I'm about to say a controversial thing as we're coming towards the end of this. Get the bleeper out. Get the censorship out. The right knowledge is also the right thing. And we've always had the belief that we can learn everything and buy everything. But the reality is, there isn't enough time to learn everything. Not in the time frame. We talked about we don't have as much time as we want, which is why partnership is key. And which is why hiring the people who know this stuff. You don't need an army of them, but do you really have someone inside your organization running these pilots who understands what they're doing? I'm going to go with no, because I've worked inside big banks, and look, part of how I built my career was that every time a new thing happened, I was trusted as a team player, team leader, and I knew the business, and I was allowed the space to learn the new thing. Has that been amazing for me in my career? Yes. Do we have that kind of time now? We don't. And big organizations don't have the discipline to say, well, this is a brand new thing, and of course we will learn it. We're not going to fire everyone, but we need to specifically go out and bring a skill set we don't have through hiring or partnership, and not your traditional partners. No offense to the big four, but they're not AI experts either.
No, they're not. So the ticker is ticking down in front of my eyes, so I can see we've only got a couple of minutes left, and I always like to close the session with this kind of forward-looking piece. Let's get our crystal balls out. And Josh, I guess I'll turn to you first. So in your ongoing conversations with banks and building societies and alternative lenders within FintechOS, if you could gaze in that crystal ball and say, what is it these folks need in the next year or so to continue to be successful and to create their own USPs? What are some of the themes that are coming out, and where do you think that's going to take them?
Can more budget be an answer?
Budget can be an answer, yeah. Well, absolutely. I mean, more investment.
Yeah, no, I mean, in all seriousness, in the sentiment of what we're talking about, it is forward thinking. It's having more of a visionary stance and taking risks and taking these 2 or 3 bets a year, and being okay with that going well or not going well, and define that within your own risk profile and the direction that you want your business to go in. But I think, and you're seeing more of these folks, these visionary leaders that are not, just sitting in their tenured seat and not willing to do something because they're looking at retirement or how they don't want to be the next head on the chopping block, but, willing to move the needle forward by taking a few risks.
Yeah, and you still think it's going to be putting the shiny new thing at the front end to help you go quicker and faster.
I mean, ultimately, a lot of them, I think, could use a platform like that, very much so.
Yeah, I thought I'd throw it in there. I'll give it a go. And I guess last words has to go to the famous author.
Why, thank you.
Of course. I might stick with AI on this one, because I feel, I guess, where do you think in the next 2 or 3 years, what do you think is going to be the most significant way AI is going to change the world of financial services?
The optimist in me thinks that actually if we get the right people around the table, one of the things it can enable us to do is fix a lot of the stuff we're talking about now, lower the cost of change, lower the risk of change. And there's some very interesting companies out there who are using AI to create modernization uplift that doesn't just translate and dump code bases, but helps you work out, what are you using? Why? Do you really need it? Yeah. How does your organization coalesce around it? I think everything we talked about today is around the difficulty and complexity of decision making, and the fact that you don't have more budget, much as we would all like it. So you always choose the things you won't do, and they come back to bite you. Yeah. If we're thoughtful about how we use the AI capabilities out there and bring the right partners into the mix to help us develop an organization that understands that whatever you do today, you're going to have to do it again tomorrow. Even if the bets you took today are right and you bet the house on AI, quantum's coming, or something else that we don't even know about. So the reality is, whatever you do today, you will have to do it again with a brand new thing. Yeah. So can we use this immensely creative capability that is only at the beginning of its cycle to actually simplify and lower the cost of change, knowing that this isn't the last iteration of anything. We'll be back here talking about something else. Yeah. And if we actually simplify our lives and our estates, it can be an exciting thing rather than, oh my God, where am I going to put that?
I love that. And actually, she's just actually given you the far more budget than you needed.
Yeah, there's also a bit of a gem in that pitch right there that I'll have to go back and look at the recording and steal. So thanks for that.
Anytime.
Right, look, so we have come to the end. It's been fantastic to have you both on the show. It's been a long time coming. I know we've promised to do this a few times now. I guess before we go, for the people watching and listening, where can they get their hands on these magnificent books?
On the Taylor and Francis Routledge website or Amazon.
Excellent. And they can find you on LinkedIn and all other socials, of course. And I mean, surely they've got to come across you on your socials, because you are the LinkedIn king. So please look these guys up, follow them, follow Leda Talks piece on LinkedIn. She takes a lot of people in. Great conversation, great thought-provoking kind of stuff. Hope you found today interesting. I certainly have. Thank you both for being here, and let's get you on again at some point in the future.
Amazing. Thank you for having me.
Thank you very much.
Thanks, Mark.
Cheers.
Cheers.